Hello, everybody. This is Douglas Auclair, known online as Joff. I own the company Logical Graphs. Today, we're going to be talking about Ethereum and Bitcoin and the relationship between the two and how you can build long-term wealth by building a portfolio around both and the interaction between both. And this is known as the ETH-BTC ratio, which I call ETHBEF for my own reasons. Okay, so let's talk about what it is. Let's talk about how it works and how it can work for you, and how you can track building a portfolio from this. So first of all, let's talk about what it is. Let me share my screen. Alrighty. So first of all, I refer you to my ETHBEF experiment page on my blog, and I include a set of resources, including spreadsheets, which we'll be getting into, both for ETHBEF, which I trade back and forth, and for Indigo, which I use as a holding platform to build a yielding results from staked Ethereum and Bitcoin. I also have a FAQ around what is the ETHBEF thing with a link to an article. Curve Finance, this is when you're building off of Avalanche, so it may not apply to some of you. And then the EMA 20 indicator. What is the EMA 20 indicator? Well, if you go to the article, you see that what is EMA? It's the Exponential Moving Average, and then how I use it, we'll be talking about. You see on my page, I have a series of charts associated with the ETHBEF thing. We'll get into that. And then I have the archive of the trades that I've done or have not done, depending on what the ratio says. So you can see what I did any particular day by going into the archive, and I explain my positions, I explain why I'm making a trade, and I explain the trade that's going on in progress, and then I go review my portfolio, and you see the final comment is the trade that I'm doing. Okay, so what is the ETHBEF thing? So if you look at my spreadsheet and we go to the Indigo portfolio, you see on the Indigo portfolio that I have tracked all the prices of Ethereum for the past 100 days and all the prices of Bitcoin tracked for the past 100 days. Where do I get these prices? Well, if it's on the current day, I would go over to the Levana protocol, and they have up to the minute prices on Bitcoin and Ethereum. And so I get the most recent price for there. If it's over a couple of days that I'm recording prices, I go to finance.yahoo.com and I just go to the chart, Bitcoin or Ethereum, and I go to historical data, and then I scrape how many days back that I need to go. I put that into my own spreadsheet because Yahoo Finance records the open, the high, the low, the close, the adjusted close, and the volume, which is all great information over however long you want to look. But I am particularly recording these prices on my own spreadsheet because what I do is I also compute with the Bitcoin and Ethereum prices, the relationship between, well, this one here isn't quite so appropriate, so let's actually go to my tracker page. The relationship between the Bitcoin and Ethereum quotes, and then I compute the EMA 20 of Ethereum to Bitcoin. And that comes up with a ratio. And that ratio in this particular case here is 0.05. And then I track the ratio. Then on top of that, I have the ratio itself. Then on top of that, I have the exponential moving average. And here is the secret of the ETHBET thing, and that is this. The ratio gives me this blue jagged line here. The EMA 20 is a smooth curve over the past 20 days. And what has been observed is that the ETHBET ratio goes up to 0.07 and down to 0.05, and it goes up and down between these two ratios. So with that information, when we see that the EMA 20 is below the hard ratio itself, then it's time to buy Ethereum. Why? Because ETH is higher as compared to Bitcoin being lower. So I'm sorry. So it's time to buy Bitcoin with your Ethereum. So the rule then is that if the ratio is above the EMA 20, that means ETH is high and Bitcoin is low. And as a trader, you want to sell high and buy low. Well, you have that opportunity right in front of you. You've got ETH high and BTC low. And so you sell Ethereum and buy Bitcoin at a discount in relation to Ethereum. Let's look at the opposite case, which is around here. You've got the EMA 20 on the 10th month, 21st day, above the ratio. So if we go to the 10th month, 21st day, we see that if I had Bitcoin, I would sell Bitcoin high with a lower ratio, sell Bitcoin high to buy Ethereum at a lower ratio. So I'm selling Bitcoin high and buying Ethereum low. So remember, the EMA 20 is the smoother curve. When it's below the ratio, that means ETH is high and Bitcoin is low. So you sell ETH and buy Bitcoin. When the EMA 20 ratio is above the ratio, then that means ETH is lower and Bitcoin is higher. And so you sell the Bitcoin and buy Ethereum. Does that work in practice? That's the theory, but does that work in practice? The answer is, of course, yes. How do I know that? Well, what I did is I set up two scenarios. I pretend that I just hold Ethereum and Bitcoin and do no trades at all. And that is my blue line. Then I have another scenario where I actually record my position when I do sell Ethereum or I do sell Bitcoin and trade to the opposite coin. And you see here that with the trades going on, the value of my portfolio is higher than if I simply held Bitcoin and Ethereum. So holding Bitcoin and Ethereum, one, is good in and of itself, because if you believe that the value of Bitcoin is going to go up over time, you believe that it's a token of value, then holding something that's of value is a good thing because it's going to rise to its value. Same thing with Ethereum. Both Bitcoin and Ethereum have intrinsic value in the cryptocurrency space and outside the space as well. So holding on to them now gives you more value in the future as they rise in value. There's only so many Bitcoin in the world. And as demand continues for Bitcoin, the supply is going to stay the same. As demand goes up, the value of Bitcoin will go up to meet its demand. Also, if you're a volume trader, that plays into that as well. But more so than that, by applying the knowledge of the EMA 20 ratio, the value of Bitcoin and Ethereum are going up and down over time. And they're mostly related to each other. So when Bitcoin goes up, Ethereum goes up. When Bitcoin goes down, Ethereum goes down, but not at exactly the same rates. And the ratio between the value of these two tokens is such that there are going to be peaks and valleys in the difference between their value propositions. And so if you trade Ethereum when it is valued higher than Bitcoin to Bitcoin, you're buying Bitcoin at a discount. And when you trade Ethereum for Bitcoin, when Ethereum is highly valued, then you're buying Bitcoin at a discount. And so that's the power of this ratio here, that the ratio exists between 0.07 and 0.05. And when the difference between the ratio and its EMA 20, or exponential moving average over a 20-day period, smooth over the 20-day period, is this differential, then you trade one for the other. Do I trade all my Ethereum for Bitcoin when the differential is in this kind of scenario? No. I have another technique that I use, and that is this. The difference between the ratios here at this point, and this is on the July 6th, or June 6th, that is, the difference between the ratio is almost nil. So if I were trading at this point, even if there is a slight difference between these ratios, I'm trading where their values are very closely aligned. The difference here is much greater. The difference here is much greater. The difference here today is very much greater. So what I do is I track the deltas of the differences between the ratio and the EMA 20. And I track the delta day by day, and then I track the max delta over the accumulated time. And so when I have the delta versus the max delta, then I have another ratio, and that ratio tells me how much to sell of the token. It says, okay, my policy is, let's say my portfolio is worth $15,000, say. My policy is that I will only trade 5% of my portfolio per day. That way, there's going to be long periods when you're trading Ethereum day after day after day. Or there's going to be long periods when you're going to be trading Bitcoin day after day after day. That leads to an eventual imbalance. Let's look at this fourth chart. This fourth chart, I started with in the beginning of my portfolio, I started with the exact same amount of Bitcoin as I did with Ethereum. And then I traded and traded and traded and traded away my Bitcoin until eventually I only had Ethereum. And then Ethereum became more value. I traded my Ethereum away and I had some Bitcoin and some Ethereum. Then I traded away all my Bitcoin. So I had only Ethereum, for a long while. And now I traded because finally the ratio has dipped far enough low that Bitcoin becomes a better buy proposition. Ethereum becomes a better sell proposition. So now I'm trading my Ethereum to Bitcoin, but I still have a lot of Ethereum and only a little bit of Bitcoin. So if I'm only trading 5% per day, I'm trading one token per day. So if I'm only trading 5% of my Ethereum per day, it's going to take me 20 days to exhaust my supply of the Ethereum, converting it 100% into Bitcoin, and vice versa. By trading 5% maximum, I limit myself to not aping in one direction when the ratio continues to be favorable in one way and losing an opportunity long term. Okay, 5% maximum, I said. So how I compute the actual amount is, okay, this is 5% maximum. $570 is 5% maximum. Now I say, okay, the delta today is 0.004. The maximum delta is 0.005. So I'm pretty close to the maximum. So I'm actually going to trade almost the maximum amount of trade that I'm allowed today, because the ratio between the EMA 20 and the ratio itself is pretty significant, which is saying that Ethereum is really highly valued and Bitcoin is really underpriced as compared to Ethereum. So the more Ethereum I trade today, to buy Bitcoin, the better the deal is. Because when we get to ratios like here back in December 1st, the difference between these two ratios was small, so that it would behoove me to trade only a little bit of Bitcoin to buy a little bit of Ethereum, because the difference between Bitcoin's higher value and Ethereum's undervalued position was a small gap. And so trading a lot of Bitcoin to buy a lot of Ethereum is buying near market price. Whereas today, the difference of the current ratio shows that Ethereum is very highly priced and Bitcoin is underpriced. So trading today means that I'm selling a high valued asset to buy a very much lower valued asset. I'm getting a good bargain today. Okay. To read more about the EMA 20, you just simply go to my blog and you look up EMA 20 and you can follow the article and go to an Investopia to find out more about that. How do you start your own portfolio with Ethereum and Bitcoin? I would recommend that you take an equal amount of Ethereum and Bitcoin, set it aside into a new wallet, and then start trading with it. So that's exactly what I did. I have a wallet specifically designated as my ETHBETH wallet. And so in my ETHBETH wallet, I have only Bitcoin, which I store into Ghost because it's earning interest, and Ethereum, also in Ghost because it's earning interest. And then I have my trades in progress that show that I am selling some Ethereum now to, as I figure it, I'm selling Ethereum for USDC because the highest value of Ethereum right now is with USDC. And then I'll trade the USDC to something that'll eventually end up as Bitcoin. And how do I figure that out? I look at the Bitcoin prices and I look where Bitcoin is, and I look for the lowest price of Bitcoin because I am selling Ethereum, so I want to sell it high. So I look for, if we look back in Ethereum, I see the price for Ethereum here is 2,521 for Manta, 2,510 for Axel USDC, and 2,512 for USK. So today's price, the best trade if I were selling Ethereum would be to trade it to Manta, because you want to sell at the highest price. Now, on Bitcoin, if we're buying Bitcoin with that liquidity that we got from selling Ethereum, we want to look for the lowest price of Bitcoin. So we see Bitcoin in Kuji at 41,765. We see Bitcoin in Manta at 41,975, which is more expensive. We see Bitcoin at 41,969, again, more expensive for USDC. And then for USK, it's 41,833. So the lowest price that I could buy Bitcoin for is Bitcoin Kuji at 41,765. I'm selling my Ethereum for Axel USDC. So I would then trade my Axel USDC that I got from my Ethereum sale to Kuji to buy the Bitcoin at its lowest price point. Okay, so I have my own wallet where I do store my Bitcoin and Ethereum on Ghost, lend it out because I'm earning 36% APR on Ethereum, which is awesome for interest for Ethereum. And on Bitcoin, I'm earning 23.15%. Again, awesome interest earning on Ghost for Bitcoin. Where can you get these APRs? And these are paid in real yields, because the yields that they pay are in Ethereum for Ethereum and Bitcoin for Bitcoin. So it's not a an altcoin token that's being paid as APY. This is APR being paid in the native token. Okay, so I store my Bitcoin and Ethereum in Ghost. I trade whatever trade that I'm doing for that particular day by going to Fin and placing limit orders to get the best value proposition for trading, for example, my Ethereum to Bitcoin. And then I keep track of that information in its own wallet. Then I have a spreadsheet, of course, because I'm me. And the spreadsheet, what I do is I track the current prices of today so I can compute my EMA 20. And if you don't know how to compute that, you simply go to the page and it will give you what is exponential moving average. And then it gives you the formula itself. So it's simply a spreadsheet formula that you can plug in once you figure that out. And then I track the Bitcoin prices. I track the ratios. I track the ratio differences. Then it tells me what's my proportion of my portfolio can I trade that day, and which turns into a value of this much Bitcoin or this much Ethereum. My algorithm computes whether I'm trading, selling, that is, Ethereum or Bitcoin that day, and then it tells me. And then it gives me how much to trade for that day based upon the proportion that I have available for me to trade that day. Then I also track the total value of the portfolio. And I also track, is my system working for me? If I just simply held Bitcoin and Ethereum, it would be worth this much. But if I'm doing these trades, it's worth this much. So by doing trades, I'm actually making more than just simply holding onto the tokens. So yes, my system is working for me. And then I also track the composition. Now, this portfolio here is my trading portfolio. Under my Indigo portfolio, and I will show you Indigo, which is on the Cardano blockchain. I have positions in Bitcoin and Ethereum that I am holding. And the blockchain's being a little bit spicy with me right now. Here we go. So it's showing me that I have staked 0.01 Bitcoin and I have staked 0.7 Ethereum. And so what happens when I want to increase my holdings? I go to my Ethereum, my Indigo spreadsheet, and I say, okay, I have these positions that I'm holding. Here's my composition of my portfolio. Here is how much I invested into the portfolio versus how much its value is. So I invested $4,465 into my portfolio. Because of the price value of Bitcoin and Ethereum has grown over time, my portfolio is worth $5,130. So simply holding Bitcoin and Ethereum is a good value proposition at present. But what if I want to buy Bitcoin or Ethereum, or since this is on the Cardano blockchain, this is all based on the ADA token. What if it's better to trade to ADA? One, I'm not going to trade Bitcoin or Ethereum that I'm holding to ADA because this portfolio exists simply as a repository of my bags of Ethereum and Bitcoin. So I'm not going to trade away from those assets that I'm holding in my portfolio. I'm going to trade into those assets. But that does tell me something. That tells me if ADA is worth more than Bitcoin or Ethereum, in this case, Bitcoin if ADA is worth more than Bitcoin, then yes, I'm going to trade ADA for Bitcoin and I'm getting a good value proposition because I'm trading a higher valued token, ADA, to a lower or underpriced token compared to ADA, which is the Bitcoin. Same thing here. I've got ADA at a high value proposition and Ethereum at a bargain value. So I'm going to trade there. What happens when the ratio of ADA to Bitcoin goes below the EMA 20? Do I trade my Bitcoin to ADA? No, I don't. But unlike Ghost, Indigo pays APYs in ADA, not in Bitcoin or Ethereum. So they're paying in their native token, ADA, not in Bitcoin and Ethereum. So when the value of ADA is below Bitcoin or Ethereum, I accumulate those yields and hold off in buying Bitcoin or Ethereum. So I accumulate my ADA at a lower value. And what do? I wait for the script to flip, because eventually ADA is going to become a higher value proposition than Bitcoin or Ethereum. And that's when I buy. So right now, ADA is slightly below value on Bitcoin. It's a toss up there, but ADA is certainly lower valued than Ethereum. So I'm not going to take my ADA at a low value and sell it to Ethereum, a high value, because I, as a trader, lose in that value proposition. Instead, what I do is I have a supply of ADA as IUSD that I have staked. And what I do is I trade the IUSD, a stable, to ADA. Why? Because ADA is at a low value proposition today. And so if I'm buying it from a stable, which is a solid straight line, ADA being at a low value proposition means that I'm buying it at a bargain rate. So instead of buying Ethereum, which is at a higher value, or Bitcoin, which is a toss-up, I buy ADA from the stable and stockpile the ADA. When the script flips and ADA goes way up in value versus Ethereum or versus Bitcoin, that's when I take that accumulated ADA and then make the purchase of either Bitcoin or Ethereum. Which one do I choose? Again, I have a spreadsheet. What I do is I record how much Ethereum I have, and as you recall is 0.7, how much Bitcoin I have, which is at 0.1, 0.01, I'm sorry. These are their values. And then I have this much ADA available to me. And then I compute the EMA 20 deltas, because I already have that computed, and the max EMA 20 delta, or the max EMA 20, or the min EMA 20 delta. And then from these two numbers versus the ratio itself, I have either a negative or a positive value. If it's negative, I have a guard around it so that I don't buy something at a negative value. If it's positive, I have the guard again, but the guard says, okay, I want to buy $189 worth of ADA today. The same thing, this is for Ethereum. The same thing goes for Bitcoin. I have this much Bitcoin available to me. I actually compared the value of my entire portfolio, Ethereum and Bitcoin. I say, this is the ratio, delta. This is the max, this is the min. I don't want to buy Bitcoin right now, and I want to buy a little bit of ADA. I put those two numbers together, I get how much ADA I want to buy for that day, which translates into, given the price of ADA that it is today, around 50 cents, this translates into about, for a $200 purchase, 400 ADA. And then I say, well, I'm also getting yields. I'm getting indie yields, which I accumulated, so you don't see any yields of indie right now because I collected them yesterday. I have some, which translates into this much ADA. I have some ADA yields. When I collected that IUSD to trade, it automatically paid out the ADA yields accumulated for that stake. And that's how much ADA I have. So this much ADA I want to buy, this much ADA I got from indie, this much ADA I got from yields. So I want to get another 289 ADA, which will bring my reserve up to 530 ADA. The neat thing is that I'm buying ADA at a low value proposition now. When the script flips, I'll have that low value propositioned ADA, but now it's at a high value, and my system of EMA 20s will tell me which token to buy with the ADA that I have, one or both, in proportion and how much. And this spreadsheet is freely available to you. Just simply go to my blog, and you can follow the link from my blog. Let's I think I transitioned away. So let's get the blog up. You go to the ETHBET experiment page, and there you have the spreadsheet for the tracking or the trading that I do between Ethereum and Bitcoin. And you have the spreadsheet for the Indigo portfolio, which is my holding portfolio. Those spreadsheets are freely available. Just follow the link. And then also the EMA 20 indicators. I put them all up on my page, the indication results, portfolio values, and also the archive of all my trades, so you can do the same kind of thing. So, okay, back to you. How do you start a portfolio like this? Let's say you have money to spare in Ethereum and Bitcoin. Let's say you have $1,000 worth of each token. You would put $1,000 worth of each token into a new wallet. You can label it ETHBET, and then you start tracking. The first 20 days, you're not going to do any trades because you're tracking that. Or you can go back and get a year's worth of history from Yahoo Finance, and then compute your EMA 20 for the next day trade. So the next day, the first day, you establish your wallet. The next day, you look at your EMA 20 ratio. Let's go look at the EMA 20 ratio. And let's say the EMA 20 ratio is this. Well, the spreadsheet tells you you should swap, and again, you put the amount of Ethereum and Bitcoin that you have into your own spreadsheet. And they'll say, okay, swap 0.01 or 0.05 Ethereum. So you would swap 0.05 Ethereum on Fin, or you could do it on, for example, you could do it on Osmosis. If you're keeping your portfolio on Osmosis, you would say, okay, I've got Ethereum. I want to trade it to Bitcoin. And on Osmosis, it would trade it for you automatically. You would get an automatic amount of Bitcoin, which my spreadsheet would calculate about the same number because the ratio is going to be the same. Osmosis is going to charge you a little bit for the trade, so it's going to be slightly different. I prefer to manage how my trades go. So what I do is I go to Fin, and I place minute limit orders. And so if I'm trading Ethereum, I go and I look at the prices of Ethereum on the various order books. I choose the highest value, then place the limit order. So if I were trading Ethereum, I would be selling Ethereum. And so I would sell 0.05 Ethereum. And then I would say, okay, what's a reasonable price here? I'm looking at, here is the highest value proposition is Ethereum against Manta. So I go trade 0.05 Ethereum. I look at the prices here. And I say, okay, we have this kind of range going here. And the price is kind of stabling out here. So I'm just going to choose the next highest price for Ethereum against Manta, undercut the bid, the ask that is, and then trade 0.05 Ethereum. Place a limit order, let that order fill, and then go to the Bitcoin side and look for the lowest price Bitcoin, 41.7, 41.9, 41.6, that's NBC, that's, I'm not looking at that right now, 41.9, 41.8. So again, Bitcoin Kuji is the lowest price, but I have Manta. So I go to the Manta board. And I would trade my Manta, however much I had, and with it, sell it for Kuji. So I'd sell it at this price, and let's say it's 1,000 Manta, that just making that number up. Trade that for Kuji, then I would go back to the Bitcoin order book with Kuji in hand, and then buy the Bitcoin with the Kuji. I say, okay, we have a big price drop off here. We have this kind of range here. Let's say I have 500 Kuji. So I look and I say, okay, I can go all the way down to here at this price point if I believe that that is going to hit. I don't, because this is kind of low, but this here is kind of more reasonable. So I would go to 11,133, look for 500 Kuji around that price point, and I'll just undercut the 100, overcut the 100, and then that has a higher possibility of hitting. How do you know this is going to work for you? You don't. So that's why I recommend you start day one with just putting the tokens into a wallet. Day two, doing your first trade based upon the EMA 20 that you got from Yahoo Finance, seeing how that works for you. It's going to be a rocky start. There's a lot of things to learn about this, but the basic concept is this: Bitcoin and Ethereum vary in value. When Ethereum is higher valued than Bitcoin, you sell the Ethereum to buy Bitcoin. When the Bitcoin is higher valued, you sell the Bitcoin to buy Ethereum. Then you'll get the feel of how much Ethereum or Bitcoin you're selling. And you'll also get the feel of how you're doing your trades. If you want to do trades on osmosis, just simply Ethereum to Bitcoin back and forth, it still works. And you're totally fine with doing that. If you want precise price control of your trades, Team Kujira's order books on Fin work wonderfully for me. I'm comfortable doing those kind of limit orders. You can get comfortable doing it. It just takes practice, reading, succeeding sometimes, failing other times, learning from the experience and pressing forward. When you've done it over and over and over again, I recommend you measure each time you do these trades, and then you plot, okay, I came in with this much money. I did a bunch of trades. I now have this much as a value proposition versus how much I would have had if I didn't do any trades at all. It's working for me, or it's not working for me. What do I need to adjust? And then you start adjusting from your measurements. Your measurements tell you if you're doing well or if you're not doing well. Your measurements tell you where you can focus in on. So if you look at your measurements, you say, okay, this is a good trading opportunity. There's a wide gap here. I want to trade more. Or here, this is not a good time to trade. I'm just going to leave this lie and let it ride until there does a gap appear, because eventually, even if it takes 3 months, 6 months, the gap does appear. And if you have the Bitcoin and Ethereum in hand, you can take advantage of that gap. As you look at my portfolio over time, I've added to the portfolio. So it's not fair to say I started with $7,000 and now I'm valued at $15,000. So my money doubled in a half a year's time. That is not correct, because I've added funds into the portfolio as I've gone along. But I have increased the value of the portfolio by applying this FBET ratio with the EMA 20 indicator to tell me when to trade and what to trade, and by measuring the max delta, how much to trade. By combining these three things together, I start with a portfolio at a certain value, and I'm growing my value of my portfolio over time. The neat thing here is this is a ratio between Ethereum and Bitcoin. It doesn't care what the stable value of these tokens are. So at the beginning of the year, or let's get real here. Let's talk some real stuff here. In May, at the end of May toward June, Bitcoin was $27,000. Ethereum was $1,800. I remember when Ethereum was $1,200. I bought Ethereum when it was $1,200. This ratio doesn't care that those tokens were those values. And it doesn't care that Bitcoin is now worth $42,000 and Ethereum is worth $2,500. But you care, right? So by holding Bitcoin and Ethereum, the value proposition of you simply holding from when it was $27,000 and $1,800 is that they're now nearly double the price. So if you just simply held, your portfolio would grow from $2,000 to be worth approximately $4,000 a day with no trades. But if you add in the trades, you start adding in a little bit more value. The magic of the trades of the ETH-BTC ratio is that you're growing your ETH position and you're growing your Bitcoin position a bit by bit by bit. So if you started with 1 Bitcoin and 15 Ethereum, by doing the trades back and forth, eventually you have 2 Bitcoin and 20 Ethereum. And then eventually you have 30 Ethereum and 3 Bitcoin. And you put no money in after that initial investment. It's the portfolio grows because Ethereum and Bitcoin change value relative to each other. And by taking advantage of selling Ethereum when Ethereum is higher valued, or selling Bitcoin when Bitcoin is higher valued, you seesaw your way up that curve. And the curve is always going up because you're always trading the higher value token versus the lower value token. And so you seesaw your way up to a larger portfolio position, growing wealth. My resources are available on my blog. My spreadsheets are available to you. I recommend you start with a small portfolio, start trading, start getting the feel of how it works for you. This is a portfolio that has grown since May of last year. So this is only a half a year old. And already I'm seeing the results of that. But it's also a portfolio that's grown over a half a year. I did not stop the next day and say, did everything work for me? No. You have to measure over a long period of time, or what may feel like a long period of time. The advantage of these blue chip tokens, Ethereum and Bitcoin, is that they have been around for more than a decade. And so that probably means that they're going to be around for more than a decade. And that is why the Ethereum Bitcoin portfolio is one that is wealth building for the long term. Thank you very much.